Welcome back to Broker Talk. I'm Larry Lawfer, your host each week, and we are a real estate show. We take you behind the velvet rope to hear what is really going on in the back rooms. Today's show is about the mortgage industry and their products, your mortgages. There are three places to get funding: banks, mortgage loan officers, mortgage lenders. But our guest today is well versed in the industry, and I'm going to give him the chance to explain all that. Rick Scherer is one of the good guys, one of those people who's been doing his work for a long time at a very high level. There is no one I like to hear more from talking about the community and the mortgage industry than Rick. Welcome to the show, Rick.
Larry, thanks so much for having me, man, and love your show, and I appreciate being part of it.
Well, it's a pleasure to have you. I know from being out there on the street every single day, talking to buyers and sellers and investors, that a good vast majority of them don't know the differences about where they can find their mortgage products. Can you just kind of give us all a primer of what that is?
Yeah, absolutely. It's almost seems like a mortgage is almost a commodity, like a can of beans on the shelf.
It is.
But really, truthfully, it's not. There are really three different places that someone can obtain a mortgage. So I break it into three sort of categories. The first one is that big bank credit union sort of tranche, right? It's the I've been banking my checking account. They do savings, they do CDs, and they happen to also do mortgages. They have their own set of rates, own set of guidelines, and they're a solid place to go get a mortgage. Not always the fastest right place to get a mortgage. Typically, they got to go at their speed, but certainly that's an outlet for people to get a mortgage. I like to go in the opposite direction, and that's a mortgage broker. And there is a difference, but mortgage broker, essentially has the ability to go off and really look at a bunch of different options, right? Many rate sheets that they can look at, shop for. The one, I don't want to say downside, but the one difference there is they don't actually make a lending decision. So, they whoever, rate that they pick, they count on their underwriters and their closers and their funders. And, so it sort of leaves a little bit of control, right? The loan officer loses control because it's kind of being outsourced
Can
else.
I dumb this down a little bit just for a
Please.
second to
Yeah.
bring people along? You have a mortgage. You are out buying a mortgage. So you go to your bank, that's like Bank of America, Chase, Wells Fargo, all of these places. If you actually think those people in there care about you because your money is there, that's not the way the decision is made. But forget banks for a moment. Going on to the mortgage programs, then these loan officers have the option of going to a variety of different banks. And that's really what you're talking about in the different rate sheets. The different rate sheets are the different cans of beans, the different
Right.
shoes. Okay.
Yep. Yep. Absolutely. And so again, they're relying on that bank to do the underwriting piece. And so sort of the blending of both of those is where I come from, which is either called a correspondent lender or a mortgage banker. Really, the difference is we do get to go to all those different mortgage lenders, right, and their rate sheets. However, we keep all of the control over the process all in-house. So it's my underwriters who are underwriting the files. It's my closers and funders, and it's my timeline. And so that's really it. I mean, you get the big banks, and you're right. I hear a lot of people, I'm just going to go to my bank because they have my checking account. It's like, well, it's not that easy, right?
Right.
They're not going to say, okay, you're all approved, so but you can go to the banks, the brokers are on the other side, and then right in the middle is that, I call it the best of both worlds. I'm a little biased, so I take it for what it is.
Well, understandably and justifiably so, because the fear along the process is somewhere something's going to happen. And quite often it is underwriting. So what you're really saying is someone who approaches it the way you and your company do, OnTo Mortgage is the name, right?
Correct. Yeah.
Um, is that you can call up your underwriter, and a loan officer can call the bank, who then talks to the underwriter. So right now, that is not as significant to me because everything's kind of, if it's anywhere close, they're going to let you do it. but it isn't like the 29, 2010, 2011, where there was no look mortgages.
Right. Yeah, no, it's, they're really looking for that ability to repay, that someone can make, make that mortgage payment, that, there's some substance behind their application. So yeah, no more of that, not, not needing to qualify, because the rates are always, or the appreciation is always going to go up. So.
Well, I think the really important thing between all of the people, the lawyer, the lender, the bank, the appraisers, the underwriters, the real estate agent, the buyers, and the sellers, is communication. Things are happening that not everybody is aware of. And communication between the loan officer, the bank, and that process, which is not transparent to the consumers, is a real sticking point for many people, and communication being the key. But I understand you guys have a kind of a cool perk. What is that?
Yeah, so again, I've been in the business 20 years. I've worked for many different kinds of companies, big box, mortgage company, bank, smaller boutique mortgage companies. And one of the things that was always lacking was that communication piece. And so for me, when I built OnTo Mortgage, we launched about 2.5 years ago. Communication was the center of all of the whole transaction. Real estate, buying real estate, there's always things that can pop up, right? You could plan for them, you could not plan for them. It's just, there's a lot of moving parts. So that communication is key. And so, we just created a 14 benchmark. So as the client's going through, they're pre-approved. Boom, everybody is notified. Your loan's approved. The second the underwriter pressed the button, boom, everybody in the transaction is notified. Your mortgage commitment, your clear to close, your CD, all of those really high points and throughout the process.
Yeah.
So it just brings the anxiety level way down. Right.
Yeah.
Especially for first-time home buyers, never done this before, doesn't know what's over the horizon. So, I think if one thing that we could all do as an industry is really make sure that we're over communicating to our consumer, because that communication is key, right? That's when we get in trouble, is when we stop that communication.
Well, or not answering your phone because somebody has a question and you don't get back to them, especially if they're upset.
100%.
Answer your phone. That's your job. We get good at having uncomfortable conversations because it is part of the process of life. But, this is a big deal for everyone. I don't care how much money you have, but making a purchase of this level is significant, and it deserves professional attention right away. Every question should be answered. But do I think the client is always right? Quite often not.
Well, I wouldn't even say not always right. They just don't understand. They're not,
Much better
they're
way.
uninformed, right? And
Right.
so they're right in their own mind because they're coming from where they're coming from, right? And
Right.
so one of the trainings that we do constantly here is the empathy, right? Is when I have a processor or a loan officer who's got 20 or 30 loans in their pipeline, it's a transaction for them. It's a movement. And sometimes if we don't lose sight of it, we don't have that empathy around. Remember when we did it, right? Or, hey, how do we like to be communicated when we were doing it, when we were sitting in their shoes?
Yeah.
And and so that's really important for us. And so I always say it's not our perspective, it's theirs, right? And if we need to educate them better, right? That's where you go from zero to hero. Like you can save that transaction from going the wrong way.
Right.
And so, again, back to your original point, it's communication, it's language creates. So it depends on how we decide to create it. Right. And so, but it's a lot of, we do a lot of training here because we are glorified waiters and waitresses, right? You want extra pickles? We got to get you extra pickles, right? Yeah. It really comes down to, we're in a service
Hold the
business.
sauce.
Mortgages. Right. And so we just need to, over explain, communicate. And, one of the other things I'll just add real quick, one of the things we do with all of our clients is we tell them up front, you will get a 5-star customer service experience. Like we plant the flag, right? It's risky, it's edgy. However, we tell them, here's how this is going to work. And we actually enroll them. In other words, hey, we're going to over communicate. This stuff is going to happen.
Yeah.
And Mr. Johnson, in order for you to have a 5-star experience, you can't fall asleep and wake up at a closing table in 45 days from now. Can't happen for that
Right.
five. So what I'm going to ask you to do is, if you could send me your documentation within 24 to 48 hours after we request it. If you can do that, man, Mr. Johnson, I can tell you we're gonna knock the cover off this ball. But what that does is it enrolls that client in, and now they're engaged with you. And so that just allows for that communication, and we can count on them to show up and do what they say they're going to do. And that's part of the
You've
the
set expectations. You've set the expectations, and you're willing to do it your part. I always tell people early on, before we actually sign agreements, that there's going to be three uh-oh moments and one jump off the cliff moment. I don't know what they are yet, but I've experienced them before and we'll figure it out. So
Yep.
when you arrive at an inspection report happens, something's in that's an uh-oh moment. You figure it out. Not clear to close a couple of days before, that's a jump off the cliff moment. You need more experience and expertise to get that done based on whatever the circumstances are. But
Yep.
I know that there's always constant pushback with agents and often with commissions, and that you guys don't have that because you've set fees. You have some things you can be flexible with, but most of the stuff is pretty well set at a reasonable and fair rate uh, process. But you will get asked, can you reduce your commission? And a lot of agents say, yeah, what? Here's a list of all the things that I do. Tell me the things I can take out,
Right.
and I'll do it for less than you. But if you're dropping your commission, what's to say that you're not going to bring them offers and not get them not as much as they want because you're kind of a pushover with it? But enough about what real estate agents do and
Yeah.
they are in the wild. One of the other things that I've always admired about you, Rick, is your actual physical commitment to your community. And I see you're not dressed in your usual corporate garb today.
Yeah.
Let's talk about what you and your entire office is doing this afternoon for a moment.
Yeah, I left the Armani suit at home today, but yeah, no, again, one of the foundations of building this company is really digging into the community, and it's something my business partner and I have always wanted to do in all the other companies. But now that we own the company, so yeah, this afternoon we're all heading into Boston. We're doing 20 of us are riding on stationary bikes, usually in the cold. Today, actually, we got a little bit of a nicer day. But it's to raise money for Homestart. And Homestart essentially is just the real estate agents for the homeless, right? They take people out of the shelters and put them in permanent housing, 96% rate. So, that's the stuff that fires me up as a leader of the company is to be able to go out with my people and just, get together. I think we raised $13,000 in the last week or two. We're going to take 13 families out of homelessness. And so that fires me up. We do some things every month. We do OnTo Gives Back. So $1,500 goes out to a charity of our clients or our buyer agents' choice every month. So again, just other ways. And we've got a bunch of other Habitat for Humanity and a couple other things we've got planned for the year. But yeah, I mean, it's, we're all, for us that are in real estate, we've had a lot of really great years. It's really time to really help people that haven't had the great years and hasn't been as fortunate being in real estate as we've been. So we do whatever we can do to give back.
Well, I think that's really important. I think that's one of the differentiations. They always talk about how do you choose the best professional, and I like coming in afterwards where someone, the client, is very upset with the whole process of selling their house or buying a house, and they say, but my real estate agent, I really like them. They were nice, and I remind them that sociopaths and psychopaths are nice too. But
Right.
you have to be good at what you do. You have to know what you have to do, and you have to be really dedicated, as you said earlier, to get them their goal because we're already doing that. And so if you are, one of the ways to differentiate is find out philanthropies they're involved in, what they do, if they're involved in their industry, what they do for their industry and what that looks like. Because then you're going to get people who understand the enormity of what we do. Shelter is primary for all of us. So we're in a very primal business, and our clients, the consumers, they deserve everything that they ask for,
Right.
within reason.
Yeah, let's not get crazy, but yes.
Yeah.
Yeah. And that's really what it comes down. We are in a service business, right? And that's what it is. And you have to do whatever it takes. So like, that's sort of, one of our mottos is, it's our core value number 1 out of 5 is client first, right? If you need to jump on with their CPA, their financial planner, you need to go, you just have to, we're in that service business.
Right.
So, it's important for anybody to understand that.
Yeah, exactly. So interest rates and the federal rate. It's another thing that people get confused. They think, when the Fed lowers or raises the interest rate, what relationship does that have with home rates?
Yeah. So it's one of the biggest misnomers that people hear. The government's adjusting the rates higher, they automatically think mortgage rates, and it's actually opposite. So they're inversely related. And so I'll tell you a little bit about kind of the mechanics behind it, just so you guys can understand the relationship. But mortgage rates are part of bonds. So every day we track the mortgage-backed security market. It's not easily seen if you go to CNBC, or sometimes they look at the 10-year, but it's they don't always move in the same direction. But so mortgages are bonds. And what the Fed is doing right now by raising the Fed funds rate, or the prime rate of interest, is they're doing that to control inflation, right? You've heard this, right? Inflation is the biggest it's been in 40 years. Everybody's freaking out about inflation, and quite frankly, they should be. And so the Fed is coming in to raise that rate to control inflation. Bonds hate inflation. It erodes the value of a bond. So when the government says, okay, we're going to up the Fed funds rate by 0.25%, or 0.5%, bonds rally off of that, because it's like, oh, great, you're protecting us, right? You're protecting our value. So so I think it's also important for everybody to know that the prime rate of interest, or the Fed funds rate, that controls all your consumer debt, right? So last couple of years, if you could find a car to buy, your rate was really low, right? The rate was really low. Home equity lines of credit, right? Prime was at 3.25%, really low, right? And back in the heyday, it was up at 8.25, right? So so the Fed has been kept that really, really low over the last bunch of years. Now they're going to start to move that higher. So your credit cards are going to be more expensive. Your all of the consumer stuff, personal loans, things like that, are going to be more expensive. Mortgage rates will dip down a little bit, but they tend to trend over time around the same way.
Yeah, yeah. It's interesting how the things affect, and how people out there don't understand how the mechanisms work, because you can't ever time the market, because the market is fluid from day to day. Think about that. We're going out to buy something unique, or to sell something unique, and we're inviting people in, and all of that. The buyer is the one who determines what they're willing to pay for the property. Uh, the other buyers standing behind them saying, higher, higher, are the ones
Right.
driving.
Right here,
I'll go. But
yeah.
I had a deal this week, 18 offers on it. And I have a client, I'm never going to let them overpay without saying, hey, we're overpaying here. But I asked the agent, so do you have any couples in your 18 offers, 17 offers, because we were the 18th, that are pregnant and 6, 7, 8 months pregnant? And he said, yeah, there's 2 of them. I said, we're out, because it's primal. They need something, and they're going to bid and bid and bid. And that may or may not be a bad thing for them. It'll be a good thing for them to nest and have their child and get that dream. But oh my God, $110,000 over. It's outrageous what's going on.
Yeah. It is. And I have a lot of people that say, "Hey, should I stay on the fence? Should I sit this one out? Should I?" I always ask, "What's your alternative?" Right? Are you paying
Yeah.
$4,000 in the Seaport every month? Right?
Yeah.
Okay, well, they're just spent $50,000 next year. What, like, are you in your parents' basement? Maybe, right? But I always tell clients, find the house. Don't worry about the rates yet, right? Don't worry about that. Put that on the side for a second.
Yeah.
Find the house, find the opportunity, find that first. Rates secondary, because
Right.
here's the other thing. Rates are higher, actually much higher than we thought they were going to be. So if you found video, I do a lot of these podcasts, I do a lot, and I predicted we wouldn't go over 3.5% 30-year fixed, right? And so I'll be the first to tell you I was dead wrong, because we're knocking on 4%'s door really quickly, right? And because of all the debt that we've taken out as a country, they're actually predicting rates to get back into the 2% range over the next 18 months. Okay.
Huh.
So if you, there's a whole, I actually have a webinar on it tomorrow morning. Because of, the recessionatory stuff and all that things that may raise their head because of the amount of debt, the balance sheet from the Fed, all of those things. What the guy that I follow on the bond side for 20 years, he's right more than he's wrong, is saying we're going to be back into the twos. But so if you are, yes, it stinks that you're at a 4% rate today, and wait 6 months, if the rates do come back down, you can refinance down. So a lot of people get too much in their head around the rate. I would say, get out there and find the property, right? Get out, find that dream home of yours. We'll make the numbers work. And then you always can ratchet down as the rates allow you to. My dad always said, we're trying to catch a falling knife. Like you said, don't time the market. Try to catch a falling knife. You're going to get hurt. So, find the property. Interest rates are what they are. And then we'll get you, then we'll ratchet you down when we can. So, I just, now we just need the inventory.
That's far more useful information. Don't catch a falling knife. And my grandfather always said, you don't, it always rains on rainy days. I said, thanks, Grandpa. Anyway, there's so many old wives' tales and all of this. And the beauty of the show is being able to hear what's really going on and what the conversations are like behind this velvet rope of the professionalism. We do this every day. We have these conversations multiple times in a day. The people buying and selling may have done it a couple of times in their life, but they don't do it every day like we do. So they don't hear this, and obviously they're not going to know as much or as deeply. And that's why you end up working with a professional. And that's why professionals like us end up working with each other, because you trust that other person.
Yeah, they could have sold 4 or 5 years ago. They didn't sell today. They're not in this market. That's why they have to reach out to you, because I know your reputation is handholding them, giving them all that information, because this is a whole different market. This is market like we've barely seen. I mean, I know in my town, I'm in Hopkinton, I think there's 4 or 5 houses on the market, right? There should be 35 to 40.
Yeah.
That's an issue. So it's how do you list your home, but how do you successfully go buy a home? Yeah. And what does the mechanics of that look like? It's still different than 4 years ago, 5 years ago.
Yeah.
And that's why, again, reaching out to a professional like Larry, you have to. You can't think you're going to do it by yourself, or go to someone who's newer I love new agents. And it's important now to make sure that you're on the right team so you can navigate this crazy waters that we're in.
Well, the best way to do that, again, we're back to communication, is talk to people. Talk to other professionals. What was it Larry Bird said? Move without the ball, and that's why we do webinars. That's why we do networking with each other, because in that process of that, we will have conversations that we wouldn't normally have had, because it's not a process oriented. It's a gathering. It's an education. It's a networking kind of thing. Just like you going down and sitting on a street and buskering for money to help people move out of homeless shelters. That's it. Giving money is valuable, and everybody's got their hand out right now. Everybody, because so many people are in need. Giving your time is a different thing. And when you give your time and your money, that's special. So congratulations for that. And Maybe I'll drive by and throw some money.
Well, hey, listen, I got 19 of my employees because I'm getting drinks afterwards. I'm sponsoring a little happy hour afterwards. So
There
stop
you
by,
go. There you
stop
go.
by. We'll give you the
Yeah.
address. Yeah,
Yeah.
but it is. I mean, it's again back to just the community. Everybody wants to be together now. It's been 2 long years, right,
It
of
has.
this nonsense. So it's really good to get everybody together and
Yeah.
drive that.
There's let's talk because we're talking. We just have 4 or 5 minutes left. There's a new thing that's been going on because of the lack of inventory. So many people are afraid of putting the house on the market because they know it's going to sell that day and they're going to get a lot of money for it. But oh my God, where are they going to go? And it's going to take that loan a while to close, but they need a down payment. And now, my understanding was for years you weren't allowed to borrow right before you sold. But there's a bridge loan program now. Talk about that.
Yeah. So, again, back to this lack of inventory problem. How do you, every time someone says, well, I want to really sell, I'd love to upgrade or maybe downsize, I don't know where to go. But then your catch 22 is, well, if I put an offer in, all of my equity is stuck in the home I want to sell. How am I going to buy a house and put my down payment down to go and do this? Or how am I going to go non-contingent, right? So not subject to the sale of your house because it's such a crazy seller's market. No
Right.
one's taking those offers now. So what my business partner and I did, we came up with a proprietary mortgage program called OnTo Bridge. And what this has allowed our sellers and buyers to do is take a mortgage out on the home that they're vacating, right? So they have their current mortgage maybe that they've been paying. We take a second mortgage out. Let's say they need $200,000 in order to put on the next home, right? We'll put a lien against their house or they're departing, and we'll give them their down payment for the new property.
Right.
Right. And that may allow them to not go contingent so that they can go under agreement. And then, Larry, you're going to end up selling that house simultaneously anyway. Or some clients say, but I want time to move. I don't want to be rushed. I want to paint. I want to do some work on this house, but I want to close on it and still have this house. We get paid back when they sell the other home.
When it closes. When it closes.
When it closes.
Yeah.
So for us, what it's done is it's shaken so many sellers off that fence to say, well, let me look into that, right? I know I'll sell my house in a minute, like you said. I want to go find a property. I can't go contingent on it. So let me do the bridge loan, or at least know I have a bridge loan there, go under agreement. And then again, simultaneous or they delay it and it's per day interest type of thing. So there's not a lot or any lender I know right now that's offering it. That's not to say there isn't. So if anybody hears about it, tell me so I stop saying that. But it is a pretty unique program right now. Again, we just launched it to help people free up that inventory because we need inventory.
We need inventory, across the board. And I was thinking, as you said, $200,000 down payment, even at 5%, that's a heck of a property. We're talking,
And that's, if we can just say that, because again, 2 times in the last 2 weeks, I've had clients call and say, my grandmother, my mom, my uncle said I need 20% to put down. I've been on the sidelines for 3 years. I finally have my 20%. It's like,
yeah.
Do you could have bought at 5%, right? So
Yeah.
we do a lot of that low money down, even low money down jumbo loans, 5% to $1 million, 15% to $2 million. So I want people to just know that you don't have to have 20%, and don't worry about PMI. PMI is a dirty word. PMI will help you get into a property very inexpensively.
Yeah.
And,
with some kind of comfort because you're protected. You've got insurance, it's good. But I can't get out of the show here without noticing your Monopoly background. It is a game. We have all played that game. Which piece was your favorite? Were you the thimble or were you the race car?
I was the dog. So I am a big dog. I'm a dog lover. Not my current dogs. They're like Malteses. Those are my kids' dogs. But I'm a dog lover. But yeah, Monopoly is something in my house. I'm very competitive, and so I don't let people win. And so my family, other than my son will keep playing with me, but my family doesn't anymore. So
I'm sorry to have you reveal that, but
And
you're granted absolution on that.
yeah,
That's a Catholic thing.
yes. Yep.
Anyway,
So yeah.
it has really been a pleasure to be with you, Rick, and thank you so much. Thank you for the work that you're doing for our community. And hey, thank you for listening to Broker Talk. Tune in next week for another great show.
Thanks, Larry.
I think we're supposed to talk to each other like we're engaged in something,
Oh,
but it's hard to
yeah.
do that.
Recording